Insurance is a large expense. Are there things that trucking companies can do to control their insurance costs in this environment?
Sometimes you could say you can control fuel, but let's be honest, you really can't. And so payroll, you got to have to operate. So insurance is really the only I put in that top three category that does have a controllable aspect to it.
You're talking about taking more risk on yourself. Can you explain what you mean by that?
It's no different in the auto world. You can do that in a couple of different formats. I think that this can get really into the weeds that we don't need to do today. But I would just say the terminology deductible is what I'm referencing when we say taking risk on yourself.
How to manage the safety department like an expert without the 30-year learning curve. If you want to lead the safety department like a veteran and you don't want to spend years in the hot seat learning it the hard way or decades of trial and error, text the word success to 365-364-0714. Text me now the word success 365-364-0714. On the show this week, we've got Brent from Higginbotham, an insurance agency that practices right across the U.S., and they happen to have a team that specializes in transportation. Hence why we're talking to Brent. That's next on the Trucking Risk and Insurance Podcast.
Welcome to the Trucking Risk and Insurance Podcast.
Brent, welcome to the show. Can you take a minute and introduce yourself to our viewers?
Yeah, thanks for having me. I'm Brent Allred, transportation practice leader at Higginbotham. Higginbotham is a large privately held insurance agency, top 15 in the United States. We serve clients really from coast to coast, the entire U.S. And so the transportation team I lead is made up of approximately 60 folks that every day live and breathe the transportation industry as it relates to risk management, insurance, all the fun that we know trucking companies are struggling with at the moment. So I'm happy to talk to you guys about that today.
Yeah, and there are some struggles at the moment. It's kind of funny to me that the accountants haven't said that we're in a recession, but trucking certainly is in a recession. Just this morning, I got one of those email blasts, and it listed 2 or 3 more trucking companies that have gone bankrupt in the U.S. Here in Canada, there's bankruptcies are frequent. When it comes to insurance is a large expense. Are there things that trucking companies can do to control their insurance costs in this environment?
There certainly are. Just to back up a sec, I agree with what you said. I started with this, insurance being a top cost. I mean, most of the time when I'm meeting with trucking companies, insurance falls just behind fuel and payroll. So it is a massive cost. And I would say of those top 3, sometimes you could say you can control fuel, but let's be honest, you really can't. And so payroll, you got to have to operate. So insurance is really the only I put in that top 3 category that does have a controllable aspect to it. So there's a wide array of things that you can do. I start with this. I always tell folks that I meet with this one principle. Every time you decide to transfer $1 to an insurance company, minimum cost to a trucking company today is $1.60. So if you just start with that notion that if I'm transferring risk, I'm not comfortable with maintaining myself, starting point is going to be somewhere around $1.60. And it could vary greatly. It could be less than that too in certain scenarios if you're transferring less risk. But keep that metric in mind, because where I always go to start is just from a cost and structure perspective, just starting there, is I use a lot of benchmarking from the industry. So there's a lot of good resources out there. One I'm very keen to is ATRI. They do a lot of nonprofit research for ATA. And having served on their research advisory committee, I can tell you the people that they put on that committee are the people that you read about in all the different periodicals. They're high-powered, high-level people at the organizations they serve. So they do a report every year called Operational Cost of Trucking. I really like this because it gives you a benchmarking around insurance. And what they do is they bucketize it by size. So it gives you a really good understanding if I fall between, 26 trucks and 100 trucks. What are my peers spending on insurance as a cost per mile? So I start there because it shows you not only are you paying more or are you paying less than what most of your peers are, and then how much of that cost per mile is in the form of a premium, and how much is that coming in the form of what we call out-of-pocket cost or self-insurance, deductibles, self-insured retentions. You get where I'm going there. So I look at that first and say, are you doing what your peers are doing? And if you're not, you have a justifiable reason as to why you aren't. Example would be if I know most of my peers are taking 20% of the risk out of pocket, 80% transferred to the insurance company. If I look at your program and you're buying from $1 insurance, that might be a place to start, would be looking at taking a little bit more risk on yourself.
So before we carry on,
sure.
a couple of things I want to say. You mentioned ATRI, just in case people don't remember, and that's why I was looking off. I wanted to make sure everybody got American Transportation Research Institute. And yes, it is largely funded by TCA and the industry. And thank you for serving on the board, because ATRI really does great work. You'll find them at truckingresearch.org, because I knew ATRI had a funny website, so I wanted to look it up. So that takes care of the ATRI thing. You're talking about taking more risk on yourself. Can you explain what you mean by that? I think I understand it, but I want to make sure the viewers do.
Absolutely. So just like when you buy maybe personal insurance today, let's just talk in homeowners world. Normally, if you're purchasing insurance to cover your home from fire, wind, theft, any of that stuff, you normally have what's called a deductible. If there is a loss that occurs, I'm responsible for so much before the insurance company will start to pay. It's no different in the auto world. You can do that in a couple of different formats. I think that this can get really into the weeds that we don't need to do today, but I would just say the terminology deductible is what I'm referencing when we say taking risk on yourself. So,
yeah. And as you say, the more risk you take on yourself, the potential savings is there. And I say potential because my limited understanding of the insurance world, if there's a group of claims that fall in that strip, let's say I wanted to go from, as an example, $25,000 deductible to a $50,000 deductible. If I had a lot of claims in that area from 25 to 50, I could potentially really save on my insurance, could I not?
Absolutely. And I would say that's a prime example of why you would consider that. If you're, that there's always kind of a catch, right? With risk comes reward. You've heard all those different phrases. If you don't have a lot of claims at all, the unfortunate part is you might not save that much by doing that, because they're not really, in essence, taking that much risk that they can quantify. Okay. But in your example where you say, I do have so much that I can predict, or somebody could predict, I could potentially have in future years based on what I've done in previous years. Yes, that is something that would probably warrant a credit. And I take that further and say, what an awesome opportunity for your safety culture to know that information. And then to know that there's, the other analogy I use is the carrot and the stick, right? I have something now in front of me. It's a moving target. If I do my job well and I get others to follow my lead, then we can reduce costs, because we don't have what we project we should have.
Right.
So yeah, it's multifaceted how it can work and change a lot of perception from the top down in organizations when they do decide to go that route.
Right. And the other thing I would remind the viewers of is insurance companies are like no other, or they are like every other company in that they have to have a profit. Hopefully your trucking company has a profit, and you as an insurance agent, hopefully your company has a profit. My company needs a profit. And so if you if you take on more risk, most insurance companies want you to have a maximum of a 65% loss ratio. So if I was to say that in English, just in case somebody doesn't understand, if you give your insurer $100,000 in premium, they only want to spend at a maximum of 65,000 to make you whole again or to pay it back in claims. So if you take on some of that risk yourself, your insurance company is not going to have to upcharge those. I'm not saying that well, Brent. I think hopefully you can clarify what I'm trying to say to the viewers.
Yeah, I think in essence what you're saying is if I remove a portion of that risk, they would be paying themselves. All else equal, I can reduce what I charge you now. So
and this applies for any size of deductible, whether it's $5,000 to a $20,000 deductible or $100,000 to a $200,000 deductible. The theory behind it is all the same.
It is, I would say, again, not for maybe today's conversation, but I'd say there's a lot of underwriting principles that go into them offering those options to you or not. One of which that folks don't want to hear with the situation we're talking about we're all in is they will look at your financials, right? And it's a lot of folks, this is kind of veering from the topic, but it's important to cover for your viewers here is you'll get asked that a lot for insurance renewals, whether you take risk or you do not. They will ask sometimes to see your financials. What I like to educate my customers on is it's not always for the reason you believe. A lot of times the reason they're looking at those is to validate information the agent or broker has shared with them on the submission. For instance, I say that you guys are a fleet that has XYZ safety technology in your vehicles. You have 3 or 4 full-time safety personnel that you employ. You do maintenance in-house, and you have a state-of-the-art facility that you operate out of. Where can all that be verified? In the financials. And so it's as much fact or verification than it is actually seeing, can you actually pay your bills, which is where I think most people naturally go. And it's a little, let's be honest, put myself in their shoes, a little hurtful when somebody is saying, I don't know that you're good for it. And after we know how hard these folks work to build the businesses that they have. So I just want to clear that up for folks in case they haven't heard that before. So.
Yeah. And I know some people are offended by that. And unfortunately, the insurance industry does it because they've been lied to in the past by a small number of insureds. It certainly isn't the majority because most of us are honest, hardworking, and we just need the insurance coverage. Exactly. But there is that small percentage that tries to screw everybody.
Fair, very fair point. So we start on the topic of like that being one solution, taking more risk. Right. I can only imagine your viewers are going, well, yeah, that comes with its risk in itself. So what else can I do? I'd say let's back up. I'd say it all is in the story that's being sold or told to your insurance companies. It's making sure you understand what the grading scale is and what it is not. And so one of the things I like to educate my folks on are it's fact verification a second time. You have a safety manual. You normally are providing your insurance agent or broker that's going to work on your behalf. In that document, which can vary from as little as maybe 5 pages to hundreds of pages, depending on how big your operation is, there's a lot of information in there. Is that information telling the real story when I go and say, okay, send me a list of the drivers that you currently have in your operating in your fleet? What are we going to do naturally next? Insurance companies are going to run what are called motor vehicle reports, right? MVRs. Right. Does the hiring standards you set in your safety manual match up to that of those that are going to be seen on MVRs? It's okay if you've got a few that are falling outside those guidelines. We all understand that people make mistakes. But is it largely veering away from the standards you set? That would be, in my world, what I'd call a demerit, right? You would have some concern that reality is different from what is being written about your company. So I would take a look at those things. That can be anything from hiring standards. That could be to accident procedures. You have an accident. What does it say you are to do or not to do? Does that match up with what you're actually doing in practice? Retention of drivers. A thing I look for all the time when I look at those safety manuals is, what are they doing to keep the drivers there? We all know, everybody that listens to your podcast knows this, that retention has been a big issue in the industry for probably longer than I've been alive, to be honest. And so what are you doing to combat that? There's a lot of unique things I've seen. One is just basic. If you have company drivers, do you have a good health insurance plan? That comes with costs, and I understand that. But is that something that you're putting in place? Are there safety award programs that you have in place that reward folks doing what they should be doing or going above and beyond what's being requested of them? So I start there, the safety manual, and I really look at, again, verification of practicing what they're preaching in that document. So that's an area where you can find some savings or get, what I like to say is, get more insurance companies interested in providing terms on your account, which what happens naturally next? You've created competition, which in any business, when that's the case, normally costs do come down. Not always, but it does put pressure, positive pressure on those to do better. So it's one area, hundreds of examples I could give. Although I would tell you that it's no surprise, but technology adoption, right? If you have cameras, ELDs are a mandate in the United States now, right? So that's just par for the course. There's some exceptions still to that, I understand. But I look at cameras as that next natural evolution for our industry. I think if you're educating your driver force on those appropriately, I call them event recorders, automatic event recorders. The reason for it is, we all know nobody has enough time in the day to go sit there and stare and spy on their drivers. That's no good trucking company owner wants to do that, right? But they are there to protect your driver when there's a he said, she said event that will likely not if, but when that occurs, when you drive so many miles. So that's a big thing insurance companies are leaning on now is, are you an adopter of new technologies that can either prevent something from happening altogether, or if it's occurred, we have more of the facts that put us in a defensible position?
I've said it in the past many times. Insurance companies like to know the truth so that if you were at fault in the claim, let's hurry up, close it out, pay it out. We'll save money. That's the history of insurance claims. The sooner they can close it, typically they will save money because people don't get mad. And then on the other side, if we're innocent, now we've got some evidence that we're innocent. Doesn't mean that we won't get sued, unfortunately, still today. But that's what you hire your insurance company to take care of, right?
Yeah.
So what else? Go ahead.
Well, I just say you make a good point. It's very frustrating. It doesn't prevent bad actors from being bad actors, but it does put you in a position where you have the facts in your favor. And so much of my career has been defending a driver that clearly said this is what happened, but we just didn't have any evidence to prove that. And when there's ambiguity, trucking company's going to pay. Unfortunately, I don't like it. So
now, one of the things that you touched on that I really think is important from a trucking company's point of view, your insurance agent or broker, they are an advocate for you. You give them, and sorry, I'm also a strong believer in choosing your representative, so your broker or your agent, very carefully, because I want my customers to rely on the advice of that broker. So I'm not one of the fellas that choose more than one broker or agent to go out to the market. I disagree very much with that philosophy. If you were my broker, Brent, I want to be able to trust that you've got my best interest at heart, and I'm going to give you the authority to every few years to go out to the market, to market the company, to see if you can save me some money. You're my advisor, and I've got to trust what you say. My banker, my lawyer, my insurance broker or agent, those are my trusted advisors. How do you represent a trucking company and take it to market like that?
Yeah, it's a great topic, and I appreciate you bringing it up. It's one unfortunately, with prospective customers, I combat pretty much every day, right? There's a lot of differing philosophies with that. I think because we buy, and the way that trucking companies compete for business is they bid and hope that they can overrule whoever else is competing for that business. So I get the background a lot of folks come from, warrant that that's the way other things should be done too when they're making purchasing decisions. Insurance, in its easiest form to understand for your viewers, it's a chess match. Okay. It is not one. There is not a checkmate on the first move you make. It will not happen. What you can do is cause severe collateral damage for your business and how it's represented to those few insurance companies that do it well, by sending out multiple representatives. What it does in its infancy is it creates confusion. Okay. If I'm going to pick an insurance company and I go to represent you, and when I go hit submit or I email that submission to them, they say, well, we've already been approached by 2 other brokers. You have now caused confusion for that underwriter. Who is the actual agent or broker that's going to actually be awarded the business? I have plenty to do outside of this account where I know there's a clear path to success for me. I'm probably going to prioritize these over this one. And so what ends up happening is you think you've created competition, and in fact, you've done the opposite. So I am a big believer too in trust. If you feel like you are not seeing feedback from your agent every year, who, what, when, where, how, it's very simple. It's all tracked electronically. Show your work product. Show them why feedback is so critical, why you didn't get terms from this one that you wanted, or why the rate is what this is. If you cannot do those things in a basic level to educate your customer base, you shouldn't represent that firm. That's the way I believe. And we as agents have a job too. We have, just like trucking companies know bad actors, we have those in our business too. We're not immune to that. And so my job is, if we elevate our game as a culture in this insurance agency world, we will rule out or rid out ourselves of the bad actors that are out there that don't know the facts and the things that these trucking companies are being held to, and in essence are contributing to a lot of them going out of business because they're not managing that well for them. So I could get into a lot more detail on that, but I do think in the core what you said is true. If you feel like your broker is not doing the best job for you, or maybe it's been 5 years since you've had another person look at it, I can understand there being maybe some new insurance companies to the space that maybe your agent doesn't represent. I understand then the need for maybe wanting to see other options that might be available to you. But what you need to do in that situation is really allow your broker to work with the resources that they have. And if there are any they don't have, fill in that void or that gap with maybe somebody else, not every year, but maybe every subset of years that's appropriate for your business is the way to handle that. Not sending out what I call a bid packet on the same day to 15 what they think are credible brokers and hoping you're going to get good results from that. It won't happen. And I think you're going to hurt yourself in the long run. There is what we call in our world quote fatigue. You know, if an insurance company has very little turnover and it's the same people, they're seeing the same accounts every year, and they know I've worked on this 3 or 4 times with 3 or 4 different brokers and haven't been successful, probably not going to take a 5th attempt on this. And so it just all boils down to time management, right? Quick fact, and I'll let you carry this conversation. I have surveyed some of the largest insurance companies I work with, and these are names you guys would all know. I'll leave them out of this conversation. On average, I'm hearing from the underwriters I work with 40 to 60 submissions a month hit their desk. Now, keep in mind, that's working towards a future date. If it's a broker that's organized and sending them on time, that's 90 days out from when a trucking company's insurance expires. It's typically the earliest you can send it. So if you play this math game with me, that happens at 90 days. What then I call is the stragglers. They show up about 60 days. So you've got another tranche of 40 to 60 hitting your desk. And then what we call are the uh-ohs. Those hit 30 days out. That's when you've realized you've got a problem, and it's probably too late to fix it. But by golly, you got to keep your business insured, so you're going to do everything you can. So all that is compiling. So these are human beings. These are people that work 8 to 5 jobs. They want to do a good job for you, but they just don't have the time to go through 120, 180 submissions and spend hours upon hours to make a decision, yes or no. So I think the other thing you need to be evaluating your broker on is, how are they going to capture those people's attention with limited time and with all the same resources you're providing to any other broker or agent that would be working on your account? Driver's list, equipment list, your IFTAs, your loss runs, your exposure history. How are they going to do that? There's some secret sauce in how some do it versus others, but there are ways to do that. It's all data and analytic driven today, in my opinion. You've got to be able to take what is MVRs, for an example. An MVR on a typical driver, they have a clear MVR, they have some boo-boos on there. It's probably going to be a 3-page document on average, right? Compile that over 100 drivers, you've now got 300 pages of information you're requiring them to go through to form an opinion about your driver pool. I don't like chancing the fact that they may get through 30 pages of those before they form an opinion. Because what happens if those are happen to be like your 10 worst performing drivers of your 100 driver pool? Same thing with loss runs. You send them loss runs and they have limited time to go through that. You don't put in a condensed summary or format for them to see the history over 5 years. I ask my prospective customers every time, what do you think the first year is they're going to look at if they don't have a lot of time? It's the current year, right? What if that's the worst year you've had since you've ever been in business and they don't get past that before they form an opinion on your account? These are the things I just don't put to chance. And if you're playing this chess match right, as I mentioned earlier, you're doing that with one person that understands how to play that and is helping you navigate that and putting you in the best possible light that they possibly can. So,
yeah, and you said largely underwriting today is based on facts, the telemetrics, the driver's lists, the MVRs, the losses and everything. There's one thing that you didn't mention that I also think plays a really important role, and that's the broker or the agent's personal relationship with that insurance company and even with that insurance underwriter. Because I know, having worked for an insurance company, not as an underwriter, thank God, but I saw the underwriters when somebody would phone up and say, hey, I really need you to look at this account for me. Would you please? That, if they had a good working relationship, one of trust going back and forth, then the underwriter would say, yes, I'll pull it out of all of those submissions that you outline, and they will take a serious look. And I agree with the other thing you said, don't go to market too frequently. Because again, I would hear the underwriters go, I'm not even looking at this one this year because I've looked at it 3 years in a row and never even got close. And they're busy, busy people. So this all goes back, I think, to the trucking company carefully choosing their insurance broker or agent to represent them to these insurance companies. It's really important that you choose a trucking specialist, for one that knows what the hell's going on, and one that's been in the business for a while, or at least works with an agent that's got a good relationship with those insurance companies. Because you know this, Brent, you can get favors out of some of the underwriters when you need a favor if you've treated that underwriter with the respect that they deserve in the past.
I would agree. I would say the reason you're getting that, though, is I'd like to think it's likability. It's really less that. It's more professional engagement. So if I go to that particular underwriter at that insurance company and I know what makes it work for them or what doesn't, I play to those strengths on that account and say, listen, I know that your box is this, and 4 out of the 5 characteristics on this account fit right in that box. This one thing might be a major challenge, but here's what we're doing with that customer to fix that one issue. If I bat 5 times and I hit a home run 4 out of 5, I like my batting percentage, right? So it's having those conversations and being able to trust the information you're sharing with them, which does take time. It takes time. It takes a lot of submission activity. It takes a lot of verification that you're a person of your word. If I say this is going to be what gets the deal done, you follow through with that, with what's in your control, right? At the end of the day, I don't actually sign the check that's going to them, but obviously we heavily influence the decisions that those trucking companies are making. And so I agree with everything you're saying. I think as data and analytics continue to drive insurance modeling, which for people listening, modeling is just simply think like anything. You're taking in a bunch of information and it's forming an opinion on what that person should probably do so they don't overlook or oversee something. As that modeling evolves more around technology, I think you're going to have to understand that if you're going to get the favor, right? Because if it may be out of their control if they like you or don't like you or anywhere in between, they want to help you, but you're going to have to understand how they're playing the game and evolve with them. If you don't, they will not help you. So,
and just before I say last word to you, I just want to make sure the people listening, when your broker says, hey, you promised me that you would do this, and I told that to the insurance company, and that really helped us solidify this. You got to make sure you do it for me. Please, trucking company, do it, because you just made a promise to the insurer that you're going to do it, and nothing looks worse for your company and for your trusted broker agent than breaking your word. So, Brent, last word to you. What do you got to say there?
I would just say, to wrap everything up, it's 100% along the lines of what you just said. There should be a plan in place that you have with your trusted broker or agent that you may not get the perfect desired results you want this year. If you always keep in mind what I shared earlier, it's a chess match or it's a marathon or whatever analogy you want to use. The key is, are you working towards that end result? And if the answer is, I see he or she once a year and it's at the time when I need to sign the paperwork and pay them a bunch of money and they disappear, that's not a partnership. And there are other options out there you should be considering. You need to make sure you're evolving. Things do move quickly in the insurance business. And if you're not staying in front of that, CSA scores change monthly, right? If you're not staying in front of those, and it happens that you go into alert status and one of the key basic categories that might run an insurance company off, you better have an answer for what you're doing to remedy that. And if your agent's just not simply educating you on that's going to be a challenge for you and you get out in front of it, my favorite analogy I leave everybody with is you now become the nail and the insurance company becomes the hammer. So I don't say all this in fear. Run your business, run it safely, do the best that you can, and surround yourself with people that know far more about the areas that they serve you in. And if you're doing that, you're putting yourself in a position for success.
Thank you, Brent. What a great way to end it. Brent Allred from Higginbotham. If your contact info is in the show notes down below, so I would encourage the viewers and listeners, if you want to reach out and talk to Brent, do that. His contact is in the show notes down below. Thanks, Brent, so much.
Thank you.
Thanks for coming on the show, Brent. That was great. And for you, the viewers and watchers, please click a like. Give us a like, and we'll be back again next week. Thanks so much. See you then.